I'm Lindsay Labonte with Applied Mortgage. This is our refinance readiness webinar. We host these monthly, so you're in the right spot if you are a homeowner and you're wanting to potentially redo your mortgage. Take down my contact information here on this first slide. Any questions you have, this is going to be a pretty high level overview of many reasons that people want to refinance and why they do it, right? And your own scenario is going to be unique to yourself and your goals. So we would want to have a complimentary consultation and run through your specifics. But today we'll discuss it. And by the way, this is probably about 20 minutes, not crazy long here. You'll get the recording after. What's a refinance and why do you do it? What do we have for a market update right now? So home values, mortgage rates. We'll go through some real examples too, and then that way you can really be best prepared to act. So, why do people want to refinance? Well, there's a lot of different reasons. Many times it's how do I get a lower interest rate, right? Especially if you've bought a house within the last maybe 3 years or so and mortgage rates were 6, 7, 8%, and you're trying to figure out how can you get that rate down because probably you want a lower payment, but maybe you want to shorten the term of the loan and you just want to pay back less in interest. Sometimes people want to lengthen the term, remove mortgage insurance, consolidate debt, take cash out of their home to do other things with, maybe renovate, maybe other investments. Maybe you're going through some change and you need to add or remove somebody from the loan, right? These are just some of the common reasons. If we were in person, we could raise our hands and throw out ideas as far as what reason you're thinking about refinance. If you want to throw it in the chat or the Q&A, I can't remember if chat's enabled, but anyway, nonetheless, we'd have a consultation again from here. So as far as our market update goes, we're going to run through property values and some great news there. We're going to run through mortgage rates and actually more pretty good news there too. So if you're a homeowner right now, you're experiencing really great home appreciation. In the last 5 years, look at New England on this map that I have up. Home prices have changed by 65%. And this isn't just the most recent 5 year norm. This next graphic here shows over the last 30 years, roughly 30 years, how much home prices have increased and the change in home prices going back to 1991. So over 300% in New England. And again, just as far as if you own your own home right now and you're wondering, everybody asks me, is there going to be a market crash? What's going on? Well, most economists are predicting home values are holding steady and they're going to continue to hold steady into the future. So if you bought a house in 2024, this graphic here is showing potential growth in household wealth over the next few years up until 2029, and you can see that there is significant growth still projected to happen. Now, you're going to see on news headlines, it'll say prices are coming down, home prices are being corrected, houses are sitting longer on the market. That is certainly true in other areas of the country. In Western Massachusetts, where I am, New England, where most of our customer base is, we're seeing, for the most part, home prices really holding steady, and it's still pretty competitive out there when buyers are going to make offers, which is good for you to know as a homeowner because that indicates that your value is still holding strong. So, another good news is that homeowners have more equity now than ever, right? So, during the housing crash, if you look back here, 2008, 2009, there was a really big correction where what happened is home values, the green line, the equity, really dipped below the debt that people had on their homes. And you can see now there's a really wide gap. So, even if property values depreciate, they'd have to do so significantly in order to even get back to where this line crossed previously. So most homeowners are very secure right now. So if you're thinking about your house and your value and the worth of your house, you can expect not the crazy appreciation that we had a couple of years ago, but still the typical 3 to 4% year over year. Now, mortgage rates. So if you're thinking about redoing your mortgage and you're hoping that you're going to get a lower interest rate, around this time every year, projections come out from a lot of the major conglomerates. This graph just happens to show projections from Fannie Mae, Mortgage Bankers Association and Wells Fargo. These are a few places that do economic forecasts. And so basically, low sixes is the trend that is generally projected. Maybe upper fives, maybe mid sixes, but right here in this range. And that's down about a whole percent from the highs that it was at previously. So, really good news if you own the home and you're thinking about readjusting your rate. Now, I would encourage you to save this website. So, this QR code, we are not affiliated, by the way, at all with Mortgage News Daily, but that's where this graphic is from. I find it a really helpful tool if you just want a quick snapshot at where mortgage rates are currently and where they're headed. Now, these are showing purchase mortgage rates. And again, this is nationally compiled. So this is not a rate quote. This is not your interest rate. This is not the rate that I'm offering. It may be, but just disclaimer, disclaimer, not a rate quote, but a really great way to track trends. And when you go to this website, you can toggle this graph and you can pull out or zoom in or do whatever you want to. But the big thing to note here is the trend. So upper sixes, up over 7% at one point about a year ago. And you can see rates move daily and throughout the day, and they jump all over the place. There's a lot of volatility right now, especially in the last few weeks because of what's been going on with the conflict in Iran. But nonetheless, overall trend has us going from a little bit above 7% a year ago to low to mid sixes now. When you're thinking about refinancing and when to act, you really just want to be prepared with what feels good for a monthly budget. And then if we get into an interest rate range that gets you that monthly budget that you want, you can act on it very quickly because you never know when one of these spikes is going to happen. If you're not already signed up, we offer a complimentary tool called our HomeBot or our Homeowner Digest. And monthly, you get this tool that tells you how your property is as far as the value of the property and also where you may be able to save money as far as potentially redoing your mortgage or taking equity out of your home for other things. So this is actually it's an email you get monthly and it's an app if you want it. And this is of course optional, but it's complimentary. Anybody who connects with us can sign up for our tool. And it can be really helpful just to track trends. And it's kind of fun to get to play around and see your own house. So if you're not already on our HomeBot tool, send me an email or text me and we can get you on there too. Now, this is never, ever, ever going to be as good as speaking with your real estate agent. So whenever you get any of these tools, they're just using an algorithm to tell you roughly what your home value is. Same thing if you go on Zillow or Realtor or Trulia or any of those types of websites. That's just really used for trends. It's not an accurate or exact number. You want to actually stay connected with your real estate agent and have them anytime you want do a comparable market analysis, and then you'll really know the value of your home. And real estate agents want to do that because they want to stay in touch with you so that whenever you're ready to sell and move on to your next house, you've got that relationship. They already know what's going on with your house. They already know the value and they're able to get it listed and sold for you really easily. So definitely stay connected with your real estate agent and also utilize any of these tools that we offer too. Your home's your biggest asset and also your biggest debt most of the time. So it's really important to use that in a tool with the rest of your financial planning. We're going to run through a couple of real scenarios right now so that you can actually see what it looks like to refinance for those of you who haven't. And refinancing is getting a brand new mortgage that's going to replace your current mortgage. So there is a process just like you went through when you bought the underwriting process, and there are costs just like you went through when you bought. A lot of big box lenders will call you and hound you and try to get you to refinance. And they frame it as though there's no cost and there's no fees and there's nothing out of pocket. And they are lying through their teeth 90% of the time. So make sure that you're really carefully looking at and doing an analysis, which again, we will do that for you complimentary and transparently. So this person wanted to lower their rate and lower their payment. And I'm going to show you what that looks like here. So pretend that you own a home and when you bought it a few years ago, it was worth 370. Okay. I'm going to throw a lot of math at you right now. So put on your math hat for a little bit and we'll get through this together. But this helps because then when you go to do your own analysis, you kind of know what you should be expecting. So you bought the house for 370. Now, this is your current mortgage you have. We think it's appreciated. And the second column is going to be for your new mortgage. We think that value is now going to be 400 because values have gone up, like we saw in the charts we looked at. Loan amount, you currently owe 296. That mortgage is going to be paid off by the new mortgage. And remember I said there's always closing costs, there's taxes, there's insurance. You're going to set up a new tax and insurance escrow account most likely. So that is why this new balance reflects a higher amount than the payoff. This is about 8,000 higher in this case for this person's scenario. You can figure usually around probably 5 or 6,000 is going to be the closing costs, the attorney, the lender, the appraisal. Everything gets done when you are refinancing your mortgage. And typically people like to add that into their loan amount rather than paying anything out of pocket. Then there's also real estate taxes and homeowners insurance that get prepaid again and again. A lot of people like to roll that into their new mortgage rather than paying it out of pocket. Now, you can choose to do either. You could say, nope, I want my loan amount to still be 296, but then you'd be paying, in this person's scenario, $8,000 out of pocket for the refinance. So, a lot of people just roll it in, and then that's still reflected in the new monthly payment and the savings that this person is getting. When we do your complementary analysis, we'll run through for your specific scenario what are the exact costs and what exactly do you want to do there. But again, don't be fooled by the places that are not transparent and tell you there are no costs involved because there's always some sort of cost one way or another. Now, this person's interest rate is currently 7.5%, and their payment with their taxes and insurance is about $24.50 a month. Now, they just wanted to reduce their rate and reduce their payment. They were able to get down over a whole percent to 6.375. Their new monthly payment with, again, principal and interest, taxes and insurance is $2,276 a month. So they saved on a monthly basis, coming down to this very bottom, $173, per month. They also saved over the lifetime of their loan $37,000 in interest by doing this refinance. Because instead of paying this loan balance back at a 7.5% interest rate, they're reducing the interest rate down significantly. So even though they're rolling the closing costs into the mortgage, they're still saving in overall interest and they're still saving on a monthly basis. Those are the measures that you really want to look at to make sure that this refinance makes sense. A lot of people ask, well, how much lower should my rate be? Or how much savings should I have per month to know if it makes sense? It totally depends on your specific goals and your specific scenario. For one person, they may be happy with a 0.5% lower in rate, and they may be happy with only saving $100 a month. Whereas for another person, they might want to save $400 a month before they go through the refinancing process. Now, again, going back to our interest rate grid or chart, you never know when rates are going to go up or down. So, my philosophy is always if you're comfortable with the budget, think about the budget, not the interest rate. If you're comfortable with the budget and it solves your needs, then you want to go ahead and do it when it makes sense for you. Because a lot of people, let me go back to that chart actually. A lot of people a few weeks ago were saying right back here-ish, when the rates started to dip at 6%, they were like, nah, I don't want to refinance now. I want to wait until rates get down to 5.5. Well, look what happened. They missed their window because rates went in the other direction. And if I were to zoom out on this grid, the same thing has happened 3 or 4 times over the last few years. So people have missed out on that initial opportunity to save. Now, I'm not saying you want to refinance a million times, right? You don't because there's costs involved. But if you said no to refinancing when rates dipped a couple years ago, you just missed out on 2 years of saving $173 a month, right? So that's always that's the question that nobody has the crystal ball to. Are rates going to come down lower? I hope so, but I have no idea. So if it feels good to you now, then it may make sense to do. And if it doesn't feel good to you now, then you don't want to do it, right? It's all your personal preference here. So, second opportunity that a lot of people take advantage of, since property values have appreciated quite a bit, let me show you an example where somebody actually went with a higher interest rate, but it felt right to their specific situation. So this person had a mortgage of only about 124,000 left on their house, and they were at a 5.125% 5.125% rate. But look at this pink section. They had almost $1,600 a month, and right here, $65,000 in other high interest debt that they were paying. This is a scenario I see now more than ever that's tripping up homeowners. They have accumulated so much credit card debt and they don't know what to do about it. And they think, well, I don't want to get rid of my low mortgage rate. And believe me, I get it. But if you're sitting on $65,000 in credit card debt with a 29% APR, let me tell you, that blended interest rate, 29%, even though you have a 5% in the mortgage, if you have 29% on the other 65,000, you're paying back way more interest than you would if you didn't just refinance it. So this person took all of that high interest debt, they put it on a 30-year fixed rate, even though their rate got higher. It made sense for them because they brought their overall budget down to about 2,087 a month. So they saved $775 on a monthly basis, and they were able to get additional cash out of 26,000 to replenish their bank account. So again, totally case by case. One person may look at this and say, no, I have the other means to pay off this higher interest debt without touching my mortgage. Great. Certainly, if there are other avenues, that makes sense. But if not, the house can be a great tool to use for debt consolidation. So, those are two really common examples just to give you a taste of what it looks like. This graph I just threw in here to reiterate that consumer debt is at an all-time high. And so just to make it, I don't know if validating is the right word, but if you're in that scenario where you're sitting on a lot of other high interest debt, you're not the only one. Credit cards are at all-time highs here, and people are really struggling to deal with that. So just remember that your mortgage can be a tool and you want to act on it before you have missed payments or anything like that. So that really concludes. I told you it was going to be pretty quick here, like 20 minutes, our overview on the refinance process, where mortgage rates are, where home values are, what's going on in the market. We hope you found this helpful. It'll be recorded and sent out to you, and you can also find it on our YouTube channel. And the most important takeaway is this QR code has a consultation where you can sign up today and speak with myself or somebody on our team about your needs. Then you can be prepared to act because you saw how much the rates changed in that chart. So you want to be ready to go when the market, comes around to the interest rate that's going to give you the budget you need. So get clear on your goals. How long are you going to be in the house for? Do you want to lower the payment? Do you need to debt consolidate? What do you need this refinance for? And then get your financials together. That's probably the most annoying part about refinancing is you're redoing the whole mortgage. So it's just like when you bought. It's another underwriting process. It's another mortgage loan. You've got to go through that again. We try to make it as painless as possible, but it happens. And then basically just be ready to act, right? So refinancing isn't about timing the market perfectly because nobody can do that. It's just about knowing your goals, knowing your budget, and being ready so that if that rate comes down again, or maybe it already is where you need it to be, you can go ahead and you know what to do. So thank you everybody for listening in today. We hold these monthly. We also do a first-time home buyer monthly webinar, and then we often sprinkle in other market updates, tips and tricks, whatever else is going on that will help. So keep an eye on our webpage for our Applied Mortgage Academy webinars. And again, email, call, text, schedule a complimentary consultation. Our team is here to help in any way that we can. And if you enjoyed this webinar, if you found it helpful, please tell your friends and family that we do these for the community and pass the information along. Thanks.